Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Super Bowl crypto bets under investigation. Poland dismisses Bitcoin reserves. MicroStrategy rebrands. Tether CEO foresees quantum computing as key to recovering lost Bitcoin. Pump.fun refutes token launch rumors amid ongoing legal challenges. Bananas 31 and ANDY skyrocket over 200% while Bitcoin struggles at $96,000. Official Trump meme coin enriches insiders while majority of investors face $2 billion in losses. Super Bowl crypto bets under investigation. Poland dismisses Bitcoin reserves. MicroStrategy rebrands. This week's top cryptocurrency stories highlight increasing scrutiny on Super Bowl betting platforms, Poland's firm stance against Bitcoin as a reserve asset, and MicroStrategy's strategic rebranding to emphasize its Bitcoin-focused treasury strategy. Regulators investigate crypto betting platforms before Super Bowl 59. The Commodity Futures Trading Commission, CFTC, has launched an investigation into Crypto.com and Calcia to assess the regulatory compliance of their Super Bowl derivatives offerings. The probe aims to determine whether these sports-related contracts align with existing regulations. Despite this scrutiny, Crypto.com has rejected CFTC's request to halt Super Bowl-related betting, while Calcia insists it is not a traditional sports betting platform but rather an event prediction marketplace. Meanwhile, Super Bowl 59 is projected to generate record-breaking gambling activity, with American bettors expected to wager approximately $1.39 billion. A notable 11.2% increase from the previous year, as reported by Axios and research firm Eilers and Krejcik Gaming. Poland rules out Bitcoin for national reserves. Poland's central bank, the National Bank of Poland, NBP, has explicitly dismissed Bitcoin as an option for its foreign exchange reserves. During a press conference reported by Warsaw Business Journal, NBP President Adam Glapiński reinforced that Bitcoin would not be considered, emphasizing the importance of stability and security in managing reserve assets. India reassesses cryptocurrency regulations. Ajay Seth, India's Economic Affairs Secretary, has confirmed that the government is re-evaluating its cryptocurrency stance in light of shifting global trends. As a result, the country's much-anticipated regulatory framework, initially scheduled for release in September 2024, has been postponed once again. South Korea's Kimkai premium hits 10-month high. The South Korean crypto market has seen a resurgence in the Kimkai premium, the price disparity between Bitcoin's value in South Korea versus global markets. On February 3, the premium reached 9.7%, its highest level since April 2024, when it briefly exceeded 13%. This discrepancy is largely driven by South Korea's restrictive market structure, which limits foreign investors' ability to participate. Bitcoin ETFs see strong inflows in the U.S. Bitcoin spot ETFs in the U.S. recorded approximately $5.25 billion in inflows throughout January, surpassing December 2024's figure of $4.53 billion, according to SoSoValue. BlackRock's iShares Bitcoin Trust, IBIT, led the market surge, attracting $3.23 billion in new investments, bringing its total net assets to $59.39 billion by January 31, an increase of $7.67 billion in just 1 month. Coinbase and Kraken expand regulatory compliance in Europe. Coinbase has solidified its presence in the UK by securing approval from the Financial Conduct Authority, FCA, becoming the largest registered crypto exchange in the country. Meanwhile, Kraken has expanded its European operations by acquiring a Cypriot investment firm and securing a MiFID license from the Cyprus Securities and Exchange Commission. Trump's executive orders and crypto market reactions. President Trump has issued an executive order directing the Treasury and Commerce Departments to establish a sovereign wealth fund. Treasury Secretary Scott Bessent has shown measured interest in cryptocurrency, while Commerce Secretary nominee Howard Lutnick has notable crypto affiliations, particularly through Cantor Fitzgerald's role in managing Tether's U.S. government-backed assets. Trump's recent decision to impose tariffs on imports from Mexico, Canada, and China has also unsettled financial markets. Although the tariffs on Mexico and Canada are currently on hold, the move triggered sell-offs in both traditional equities and digital assets. On-chain investigator reports $65 million in Coinbase user losses. Blockchain analyst ZachXBT has reported that Coinbase users lost over $65 million between December 2024 and January 2025 due to social engineering scams. The actual financial impact is believed to be even higher, with scammers leveraging stolen personal data from external databases to impersonate security officials and convince victims of fraudulent login attempts. MicroStrategy rebrands to Strategy, emphasizing Bitcoin holdings. MicroStrategy has officially rebranded to Strategy, unveiling a new logo featuring Bitcoin's iconic orange B as part of its identity shift to focus on Bitcoin treasury operations. Despite significant fourth-quarter growth, the company reported rising operational costs. Expenses surged 693% year-over-year to $1.103 billion, with a net loss of $670.8 million, $3.03 per diluted share, despite holding 471,107 BTC. WazirX proposes 2 crypto recovery timelines. The Indian crypto exchange WazirX, which was previously hacked, has presented creditors with 2 potential asset recovery plans, one targeting April 2025 and the other extending to 2030. A vote requiring 75% creditor approval is needed to activate the faster recovery plan, as per a ruling from a Singapore court. SEC's new crypto task force announces 10 key regulatory priorities. SEC Commissioner Hester Peirce has unveiled 10 key objectives for the newly established crypto task force. Among the main focuses are clearer guidelines on differentiating securities from commodities and the creation of a more transparent registration framework for crypto lending and staking services. Bybit registers in India following $1 million fine. Bybit, the Dubai-based crypto exchange, has officially completed its registration with India's Financial Intelligence Unit, FIUIND, after paying a $1 million penalty for operating without proper authorization. Following a temporary suspension in January, Bybit collaborated with Indian regulators to ensure compliance with anti-money laundering laws and other financial regulations. VanEck predicts Solana's price could hit $520 by 2025. Investment firm VanEck has projected that Solana's price could climb to $520 by the end of 2025. Using an autoregressive model, VanEck estimates Solana will reach a $250 billion market cap, with a circulating supply of approximately 486 million tokens. This prediction is based on Solana's potential to capture an increased market share in the smart contract sector. Ransomware payments declined by 35% in 2024. Data from nalysis indicates that ransomware payments dropped to $814 million in 2024, a 35% decline from 2023's record high $1.25 billion. This decrease is attributed to enhanced law enforcement efforts, expanded economic sanctions, and a growing number of victims refusing to pay ransom demands. Shiba Inu partners with UAE Ministry to expand blockchain integration. Shiba Inu has entered into a collaboration with the UAE's Ministry of Energy and Infrastructure to integrate blockchain technology into governmental operations. The partnership aims to incorporate the ShibOS operating system on the Shibarium Layer 2 network, enhancing transparency, efficiency, and security in public sector services. Barricane launches with $1.17 billion token airdrop. Barricane has officially launched its Proof of Liquidity Layer 1 blockchain, initiating the distribution of its Barra token. The airdrop reached a total value of $1.17 billion at its peak pricing, with trading for Barra commencing on major exchanges, including Binance, OKX, and Coinbase. Gemini considers IPO amid favorable market conditions. Crypto exchange Gemini, founded by Tyler and Cameron Winklevoss, is reportedly exploring an initial public offering, IPO, in 2025, according to Bloomberg. The move aligns with the broader push by SEC Commissioners Hester Peirce and Mark Uyetter to establish clearer regulatory guidelines for crypto-related financial services. Tether CEO foresees quantum computing as key to recovering lost Bitcoin. Paolo Ardoino, CEO of Tether, has suggested that advancements in quantum computing could one day enable the retrieval of lost Bitcoin, including the holdings attributed to Bitcoin's mysterious creator, Satoshi Nakamoto, assuming Nakamoto is no longer alive. In a recent social media post, Ardoino envisioned a future in which Bitcoin would integrate quantum-resistant addresses before any serious cryptographic vulnerabilities emerge. Under this framework, active wallet users would be able to transfer their Bitcoin to newly established quantum-safe addresses, safeguarding their holdings from potential threats posed by quantum breakthroughs. However, Bitcoin stored in inaccessible wallets, such as those linked to Nakamoto, could be susceptible to quantum decryption, raising questions about the implications of such technological progress. Patrick Lowry, CEO of Samara Asset Group, responded to Ardoino's statement by proposing an alternative approach, a quantum-resistant fork that would effectively leave behind lost Bitcoin, including Nakamoto's holdings, while protecting assets in active circulation. Lowry acknowledged that both strategies come with uncertainties regarding their long-term impact on the network. Despite these speculative developments, Ardoino reaffirmed Bitcoin's foundational integrity, emphasizing that its fixed supply cap of 21 million coins would remain intact even in a post-quantum era. Bitcoin remains the most resilient financial asset ever created, he asserted. Tether expands global financial footprint. This debate arises as Tether continues to scale its international financial infrastructure. Speaking at the Plan B Forum in El Salvador, Ardoino highlighted Tether's decade-long effort to develop what he described as one of the most extensive digital and physical financial networks in history. Tether's USDT stablecoin now serves approximately 400 million users in emerging markets, providing financial access to populations historically excluded from traditional banking services. Rather than seeking external investment, Arduino emphasized that Tether prioritizes long-term partnerships. He noted that the company has established relationships with hundreds of thousands of financial partners and deployed a vast network of kiosks across developing regions, further solidifying its presence in underserved economies. Beyond its role in digital finance, Tether continues to support the U.S. economy through strategic investments, including treasury purchases, reinforcing its influence across both global and traditional financial landscapes. Pump.fun refutes token launch rumors amid ongoing legal challenges. The co-founder of Pump.fun has dismissed recent speculation surrounding a potential token launch, urging users to rely only on official communications from the platform. Alon Cohen, who co-founded Pump.fun in January 2024, took to X, formerly Twitter, to clarify that the team remains focused on refining its product and ensuring that users are appropriately rewarded. Cohen's statement also emphasized patience, stating that good things take time and cautioning against misinformation regarding the platform's future plans. His remarks come at a time when Pump.fun is drawing heightened scrutiny from both traders and regulators. These comments contradict earlier reports by Wu Blockchain, a prominent crypto analyst, who claimed that Pump.fun was preparing to introduce a token through a Dutch auction mechanism in collaboration with major centralized exchanges. Market speculation suggested that the rumored token could include benefits such as revenue-sharing incentives and exclusive platform privileges for holders. Pump.fun's rise and legal battles. Pump.fun has emerged as a leading meme coin launchpad on the Solana blockchain, providing users with a streamlined way to create and trade tokens. However, its growing popularity has been accompanied by legal hurdles. On January 16, Berwick Law and Wolf Popper LLP filed a lawsuit against Pump.fun, accusing the platform of violating U.S. securities regulations by facilitating the sale of unregistered securities under the guise of meme tokens. The lawsuit specifically pointed to the case of the Peanut the Squirrel token, alleging that its price was artificially inflated through coordinated influencer promotions before experiencing a sharp decline. Legal pressure intensifies. The regulatory challenges escalated further on January 30, when a second lawsuit broadened the allegations, implicating Pump.fun's parent company, Baton Corporation Limited, along with key executives. Plaintiffs in this case claim that the platform engaged in coordinated price manipulation schemes, resulting in financial harm to retail investors. Against this backdrop of regulatory scrutiny, Cohen's warning against unauthorized rumors appears to be an attempt to maintain stability as Pump.fun navigates these legal challenges. Bananas 31 and ANDY skyrocket over 200% while Bitcoin struggles at $96,000. Despite a generally bearish sentiment in the crypto market, tokens like Bananas 31 and ANDY have surged by over 200%, outperforming major cryptocurrencies such as Bitcoin and Ethereum. According to CoinMarketCap data, the overall crypto market has seen only a modest 1.5% increase in global market capitalization over the past 24 hours. Bitcoin continues to face resistance around the $96,000 level, while Ethereum struggles to maintain its position at $2,600. Bananas 31 and ANDY lead the market gains. CoinGecko data reveals that Banana for Scale, Bananas 31, is currently the top-performing token, boasting a remarkable 300% surge in just 24 hours. The token's price jumped from a daily low of $0.00086696 to a peak of $0.003756. The recent launch of Bananas 31 on the BNB chain appears to have been a major catalyst for its price rally. Additionally, Binance Coin, BNB, which is among the top 20 cryptocurrencies by market cap, has gained 6% in the same period, potentially fueling Bananas 31's bullish momentum. Similarly, ANDY, has recorded a price surge of over 220%, climbing from a 24-hour low of $0.0000000118 to a high of $0.00000006 for 37. The ANDY team recently announced that they have been actively developing on the BNB chain, a move that, along with BNB's price increase, could explain the token's rapid appreciation. Solana and meme coins join the rally. Among the top 10 cryptocurrencies by market capitalization, Solana has posted nearly a 4% gain, reclaiming the $201 level. Solana-based meme coin Popcat, which had been stagnant for the past few weeks, also saw a strong rebound, with its price surging 14% to retake the 30 cents mark. Market sentiment and macro concerns impact Bitcoin. Despite these isolated gains, broader market sentiment remains cautious. The Crypto Fear and Greed Index currently stands at 35, indicating a state of fear among investors, down from last week's neutral reading of 47. Bitcoin's lack of momentum is partly attributed to ongoing macroeconomic concerns, particularly fears surrounding an escalating trade war between the US and its key trading partners. While tariffs on Canadian and Mexican imports have been temporarily halted, the US has already imposed new tariffs on Chinese goods, potentially affecting over $450 billion in trade volume. These developments have contributed to weaker risk sentiment in the crypto market. As of the latest update on Sunday, Bitcoin was trading at $96,396.93, reflecting a marginal 0.4% increase. Official Trump meme coin enriches insiders while majority of investors face $2 billion in losses. The official Trump meme coin, which once soared to a high of $75, has now settled around $16.50, leaving many investors in deep losses while insiders reportedly pocketed substantial profits. According to a report from the New York Times, the Trump family and associated partners accumulated nearly $100 million in trading fees. Notably, a large portion of these earnings has yet to be withdrawn. Trump's coin and presidential timing. Trump launched the token just 3 days before assuming office, raising speculation that monetizing the mega brand was among his financial priorities. Enthusiastic Make America Great Again supporters embraced the coin, viewing it as an extension of Trump's commercial ventures, similar to his past sales of hats, NFTs, a DeFi platform, sneakers, and even Bibles. The broader meme coin market, valued at approximately $100 billion, is infamous for its high volatility. Early buyers and insiders frequently pump up prices before cashing out, leaving late investors holding losses. High-profile individuals, including social media influencers and celebrities like Andrew Tate and Hawk Tuah Girl, have been scrutinized for endorsing similar speculative assets. However, Trump's personal promotion of an official Trump token was particularly impactful, as it attracted a wave of first-time crypto investors. The fallout: small investors bear the brunt. While critics have questioned whether Trump's involvement presents a conflict of interest, given his ability to influence cryptocurrency regulation, many of his own supporters are feeling the biggest financial hit. Take Sean M. Whitson, a small business owner from North Carolina, who initially celebrated his investment in Trump on Inauguration Day with a post declaring, "Today, we take our country back." Weeks later, he expressed his frustration, calling the investment a joke and vowing to exit the token. Several leading figures in the crypto community, including Skybridge Capital founder Anthony Scaramucci and investigative YouTuber Stephen Findeisen, aka Corfiziller, were quick to denounce the coin. They likened the situation to a classic pump and dump scheme, where major holders drive up the price, generate hype, and exit before the market collapses, leaving smaller investors at a loss. Evidence of early profiteering emerges. Official Trump meme coin enriches insiders while majority of investors face $2 billion in losses. The official Trump meme coin, which once soared to a high of $75, has now settled around $16.50, leaving many investors in deep losses while insiders reportedly pocketed substantial profits. According to a report from the New York Times, the Trump family and associated partners accumulated nearly $100 million in trading fees. Notably, a large portion of these earnings has yet to be withdrawn. Trump's coin and presidential timing. Trump launched the token just 3 days before assuming office, raising speculation that monetizing the mega brand was among his financial priorities. Enthusiastic Make America Great Again supporters embraced the coin, viewing it as an extension of Trump's commercial ventures, similar to his past sales of hats, NFTs, a DeFi platform, sneakers, and even Bibles. The broader meme coin market, valued at approximately $100 billion, is infamous for its high volatility. Early buyers and insiders frequently pump up prices before cashing out, leaving late investors holding losses. High-profile individuals, including social media influencers and celebrities like Andrew Tate and Hawk Tuah Girl, have been scrutinized for endorsing similar speculative assets. However, Trump's personal promotion of an official Trump token was particularly impactful, as it attracted a wave of first-time crypto investors. The fallout: small investors bear the brunt. While critics have questioned whether Trump's involvement presents a conflict of interest, given his ability to influence cryptocurrency regulation, many of his own supporters are feeling the biggest financial hit. Take Sean M. Whitson, a small business owner from North Carolina, who initially celebrated his investment in Trump on Inauguration Day with a post declaring, "Today, we take our country back." Weeks later, he expressed his frustration, calling the investment a joke and vowing to exit the token. Several leading figures in the crypto community, including Skybridge Capital founder Anthony Scaramucci and investigative YouTuber Stephen Findeisen, aka Corfiziller, were quick to denounce the coin. They likened the situation to a classic pump and dump scheme, where major holders drive up the price, generate hype, and exit before the market collapses, leaving smaller investors at a loss. Evidence of early profiteering emerges. Though there is no concrete proof that Trump or his associates directly manipulated the token's price, blockchain data suggests that certain insiders may have gained a significant advantage. According to data shared by the New York Times from analytics firms nalysis and nalysis, at least one anonymous wallet purchased $1.09 million worth of Trump just 3 hours before Trump officially launched the token. This wallet later offloaded its holdings, securing a profit of $50 million, according to nalysis analyst Orly Bather. Further trading activity revealed another wallet that started accumulating Trump a mere 2 minutes after launch, ultimately netting $2.7 million in gains. Winners versus losers, the harsh reality. Out of approximately 700,000 wallets that profited from the Trump token, the biggest winners were 31 early traders, who collectively raked in an astounding $669 million within days. On the other hand, 813,294 wallets were not as fortunate. Within the first 19 days of trading, these investors either sold at a loss or continued holding their tokens as the price plummeted, collectively facing $2 billion in unrealized losses. Trump's business empire moves forward. Despite the controversy surrounding the meme coin, the Trump family is pressing ahead with its other financial ventures. Recently, they unveiled Truth.fi, a new investment platform positioned as a competitive alternative to woke funds. While the future of the official Trump token remains uncertain, its initial boom and bust cycle serves as yet another cautionary tale in the unpredictable world of meme coin speculation.